Hello and good evening to all of you, and welcome to the 13th episode on internal audit, organized by Board of Internal Audit and Management Accounting, with the chairman C. Prakash Sharma and myself, C. Preeti Tawla, vice chairperson of the board and Central Council member from Western region. And so it is our endeavor to serve all of you the best by catering all the each and everything about the internal audits. And today we have kept a very broad session covering about the internal audit, the inception of internal audit, and what is the role and responsibility as an internal auditor, and what is the scope for internal audits when it is mandatorily required, and when the companies are also preferring to do voluntarily, so that the quality of the audits and the statutory audits are also good. It is always felt that the statutory auditors also rely on the work of an internal auditor. And in the space of internal audit, there is a huge scope, friends, whether it is a small company, mid-sized company, or it's a private limited or the listed company, or whether it is a non-corporate entities also. The importance of internal audit is increasing day by day. Even if we see in the space of bank statutory audits, a lot of concurrent audits are there, and that is also one area and one part of internal audit only, which is concurrent audit. So the importance of this kind of audit is also increasing day by day. Give the quality report and inputs to the management. So this scope of internal audit can be specified into various ways. One can be only the internal audit types are only statutory audit, whether all the regulatory requirement, the compliances are being done properly. It can be, the scope can be very specific pertaining to certain areas, whether it is in the current assets like book debts, or how the optimum utilization of working capital is being done, or the scope can be anything as the board or the management decides. That can be the scope of internal audit. So today we are very proud and privileged and happy that Hiren Upadhyay has agreed to lead this session, giving an entire perspective of the internal audit. The overview he'll be sharing. So how this has been inception has of internal audit has been made, and I request him to actually take all the case study based the learnings, so that more and more examples can be given, and even when we are doing some or the other assignments for any of the clients, we can always convey them and ensure that some internal audit work also is there, which can be conducted by us. It is always a regulatory requirement as per the code of ethics that when we are the statutory auditor of any company, we cannot do the internal audit. However, if we are doing any other work other than the statutory audit, we can always take the internal audit assignments. So this is a larger and in broader perspectives. However, with the India shining and lot of business coming into India, there is a huge scope as a chartered accountant, as internal auditor. So with this, friends, I welcome all of you, and this session will be very, very interesting. Every Wednesday, stay with us and connect to us to have understanding of various areas in internal audit and various scopes, starting from the scope and the report writing. Today we have with us C. Jignesh Chawla and C. Rakesh Tapadia, who are moderating the session, and I am thankful to them for accepting the invitation and taking time from their busy schedule to moderate this session. I am also thankful and recognizing the efforts of Aarti Bansal, our secretary, and entire team of Board of Internal Audit for organizing all these webinars and ensuring that we are disseminating knowledge in the best possible way. With these words, I welcome all of you and ensure that you get the best out of it. Thank you so much.
Thank you, Pritiben, for the very kind words and very good introduction of the seminar. Friends, I present before you CA Hiren Upadhyay, who is going to address us and guide us through the various aspects of internal audit. I will just give a short introduction of CA Hiren Upadhyay. CA Hiren Upadhyay has more than 22 years of experience in risk advisory practice. He is partnered with one of big five accounting and consulting firm in the risk and advisory services. He has handled internal and operational audits and several consulting projects involving cost reduction, business process improvement, supply chain reviews, plant capacity optimization studies, costing system implementation, forensic, designing standard operating procedures, etc. He has worked across various sectors, including FMCG, manufacturing, energy and resources, EPC, real estate, steel, logistics, pharma, entertainment, financial services, and others. With this, I hereby request here Hiren Upadhyay to kindly take up the dais.
Thank you, Jignesh Bhai. Thank you, Preeti Ben, for giving us this opportunity to me to present whatever knowledge I have little bit to the esteemed members over here. Yeah. And thank you, Rakesh Bhai, for being the mentor with us for today's session, along with Jignesh Bhai. I'll hereby make a small presentation which I prepared. I'll just present it over here. So in today's session, what I'm going to do is I'm going to give you a little bit of overview of entire journey of internal audit, right from the what is internal audit, why internal audit is required, what are the regulatory requirements for internal audit in India, then what is internal audit standard board. Yeah, then we are going to cover what is the risk based. Then we'll go to technical session where we're going to cover what is risk based auditing. Then what we have to focus while doing internal audit. Then what is control, what is audit process, and then I'll be taking you some 2 case studies on order to cash and procure to pay, how to audit has to be carried out. So this will give you a little bit of background about how the audit approach has to be looked into when while doing the audit. Is my screen visible to all of you?
Yes, sir.
Yes, sir.
Yeah.
So what is internal audit, right? So internal audit is an independent, objective assurance and consulting activity designed to add value and improve an organization's operation. It helps an organization accomplish its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance process. So probably this statement is more word based and all, but as we go ahead with the next part of the session, probably you will be able to correlate with this, why this is very important, why internal audit is so important. Yeah. So what is the legal requirement for internal audit in India? Okay. The legal provision on internal audit as per section 138 of the Companies Act, read with rule 13 of the Companies Rules 2014, requires that every listed company should have an internal audit in place. Every unlisted company having a paid up share capital of 50 crores or more during the preceding financial year should have an internal audit. Any company having an outstanding deposit of rupees 25 crores or more. And again, any unlisted public company or private company having turnover of more than 200 crores or having an outstanding loans or borrowing from bank or public financial institution exceeding 100 crores or more at any point of time during the preceding financial year. Okay. Now, I'm not covering the applicability of the rule, the Companies Act for banking and other sector clients where certain other provisions of RBI and other regulations are applicable. So that probably you'll have to go to specific rule and regulations over there to look at the applicability of internal audit for those type of entities. And even if your company is not falling within the above bracket where internal audit is required, mandatory is required, you can still go for internal audit where if the advantage of internal audit is it's an effective system of internal control. It ensures compliance with regulations, policies, and other guidance, and reviewing effectiveness and efficiency of your operations, and reviewing your major systems. So not only regulatory requirement, even from a management perspective, many organizations get the internal audit being done. I'll just give you a little bit of background about the Internal Audit Standard Board. So our Institute of Chartered Accountant constituted a committee for Internal Audit Board in February 2004. Thereafter, this board was renamed as the Committee on Internal Audit in 2005. Then in November 2008, the council renamed this committee as the Internal Audit Standards Board. This board reviews the existing and emerging internal audit practices worldwide and identifies areas in which standards on internal audit needs to be developed. And these are some of the objectives of this internal audit standard board: to formulate standards on internal audits which may be issued under the authority of the council of the institute, to formulate and review implementation guides, technical guides, practice manuals, studies, and other papers for members, to continuously review the existing standards and guidance on internal audit and to undertake the revisions if necessary, to review existing and emerging internal audit practices worldwide and identify areas in which standards on internal audit needs to be developed, to formulate guidance note on issues relating to internal audit, including those arising from the SIAs or pertaining to any specific industries, to undertake research and promote knowledge dissemination in the field of internal audit. So these are some broad objectives of our IASB. Now, IASB has come out with various around approximately 24 standards, which probably I know of they have issued. So I'll not take you to the detail of the standards. What I'll do is I'll talk about the high level. So like there's a 1100 series standards, which it talks about on key concepts of internal audits. Then 200 series, it talks about standards on internal audit for management. Then standards 300 and 400 series is standards on the conduct of audit assignments. 500 series talks on standards on internal audits, and standards issued up to July 1, 2013 includes other standards which are there on sampling, analytic procedures, quality assurance, consideration of fraud in an internal audit scenarios, and related parties. Yeah. So till here I covered the regulatory requirement and the board of the Indian Audit Standard Board and all. So now I'll take you to more of a technical session from here. Okay. So today, there was in the earlier days, there used to be a more of a transaction-based audit or a typical, where you look at the transactions and you look at whether the transactions are in accordance with the process defined or not. But from that, we have moved quite ahead. In today's world, the internal audit has become very dynamic. It is part of a support function for the business. And it works along with the management in supporting the management in various aspects. The whole goal of the internal audit has changed. Its goal is to identify areas in the organization that have significant risk and to evaluate those areas to determine if this risks are being adequately managed. In the next slide, I'll show you how we are going to do the whole audit universe creation, and that on this particular aspect. So there are many types of risks in an organization: fraud, improper reporting, ineffective or inefficient use of resources, credibility loss, etc. So whole objective of internal audit is looking at all of this and focusing on those areas with high risk and high probability that controls are not in place or are weak. Risk assessment. Here we have to carry out a periodic risk assessment are conducted to identify those areas and develop an audit plan. Risks are identified through discussion with senior management, board members, and other key stakeholders. Additional risks may be identified during the year. So maybe if you have prepared a plan and then subsequently if you find that during the year, probably the plan needs to be changed, you can always, go back and, look into the audit universe and, replan your areas where you think the risks are high and maybe we need to cover those areas and reprioritize the areas based on the risk assessment which you do. What is risk? Risk is the probability of an event or action having an adverse effect on the organization. Risk is measured in terms of impact and likelihood. And some of the examples of risk include like operations are not effective and inefficient, financial and operating reports are not reliable, assets are not adequately safeguarded against loss, operations are not in compliance with laws and rules and regulations. So as I mentioned to you, we have to carry out the risk assessment. If you look at the center of the table, where you're talking about the risk assessment. So here I'll show you one example of a risk assessment. So what typically we do is we have to identify a typical, this is a typical audit news of a manufacturing company. So here we have plotted what are the various areas, functions in the organization which needs to be covered in the year. This is basically audit universe, or we can say the inventory of auditable areas for the company. And then if you see over here, we have talked about 3 years plan over here, that each company has got a very, very limited resources and you cannot cover each and every area in every year. So based on the risk assessment, we decide what areas we want to take up on a priority, which areas to be covered twice a year, which areas to be covered once in 3 years. So if you look at the risk category, we have given a risk category in the mention of each area, like order to cash, export incentive. It could be a medium risk. Procure to pay again is a very high risk area in a lot of organizations, and because there are a lot of buying is happening, and whether the controls are adequate or not. That is something which is very important, and that's why I've given a high rating. So today in the subsequent case studies, I'll be discussing on order to cash and procure to pay, because these are two high areas. What auditing has to be done over there. So I'll not take you to the specific over here on this audit universe, but this is more of a conceptual level, which I try to explain over here. So when you look at any of these areas, the above areas, we look at how accuracy of financial reporting is there in that particular area, whether the internal controls are adequate in each of these areas, whether the compliance is there with the process which is defined, whether it's via SOPs or delegation of authority, how efficiently and effectively the operations are there, and whether the governance structure is there or not, whether there's a segregation of duties or not. If there are person who is buying, who's taking a decision of a buying of a particular item, he's also making a GRN. So then itself the governance structure is diluted. So we have to look at the entire governance structure over there, and we have to look at what in each of these processes which I mentioned, like each of these process which you are seeing over here, each of the sub process, we have to identify the sub process of each of this process over here. So if you're looking at the order to cash, we have to look at the sub process within the order to cash and see what risks are there in each of this process and what kind of controls we have in place to ensure that the risk is mitigated. And if the risk is still not mitigated, we have to identify the gaps over there and suggest to the management what controls needs to be put in place. Yeah. So what is control? So just now mentioned about controls to be put in each of this, where you're finding gaps and all. So the best controls are preventive controls, and then we can put our detective controls. And one of the best example of a preventive control is automation. Then looking at segregation of duties, how I can, other roles where there's a segregation of duties, as I mentioned just now, one example over there. Delegation of authority, are there maker and checker process in place? Are there adequate documented policies and procedures? So these are some of our preventive controls. Whether those exist in those particular areas is something which you have to see when you start looking at a particular process and sub-process over there. And some areas, it is not possible to have a preventive controls, but then you have to look at a detective controls. Like, if someone is, buying excessive materials, whether any exception report is there, or someone using an exception report of, excess inventory lying over there, over 3 months of requirement. So those kind of exception report needs to be reviewed. So these are considered to be a detective controls. Are the reconciliations being performed? There could be multiple kind of reconciliations. Typical, like, bank reconciliations, one which we all have, grown and learned with bank reconciliations, but there are other reconciliations also. Like, your fixed asset register should be reconciling with your GL accounts. Your tax returns should be reconciling with your GL accounts. So these are some of the detective controls we have to check over there. Then what kind of performance reviews are there in the operations? How many deviations are being monitored? And then one more detective controls could be annual physical counts to be carried out. If there are any questions, or I can just move on. Yeah. So now I'll take you to the journey of audit process. So whenever we start any particular area, like sales, if I'm looking at a sales, I'll do a preliminary research of the organization, what kind of business they are into, who are the competitors, what is the market scenarios, and all of those things I'll try to understand before I start my kickoff meeting with the client. Thereafter, we will have a meeting with the client, and then we'll discuss in the process, existing process. If you have a repository of experience in the particular industry, we'll also make a note of those industry notes which we have, and then when we have interview discussions, we'll also refer those notes while discussing with the clients of how they are managing this kind of scenarios over here. And And thereafter, we look at what are the scope items to be covered, because each business could be different, industry to industry, the scope could be different, and even the same business, across competition, the nature and the scope items could vary. So thereafter, that's the reason why, even if you have a broad scope in with you, whenever you start an internal audit, you have to customize your scope of work. Then only you will have a very, very effective audit over there. So these are 4 broad steps we have mentioned: planning, fieldwork, reporting, and monitoring and follow-up. The next step, we talk about fieldwork. So there we'll carry out interviews with the process owners. We'll understand the process. We look at the systems. We look at end to end of the particular process. Then we'll document the reviews, what we have done, what discussions we had with the process owners, and whatever controls they have said that, okay, these controls exist in the organization. This kind of sales, these are the controls. Like they may mention that any kind of pricing documents are reviewed and approved before any price discount goes to the customer. So we'll call for those documents from the auditee, that show me those documents. We have mentioned that all the pricing decisions are approved and all, and we'll verify those kind of documents. So that's a part of testing and verification. And if we find that there are certain outliers or certain process gaps are there, so that audit observations and findings we'll discuss with the process owners. Once we get a preliminary confirmation from the auditees, then we'll start with the reporting. We'll develop our draft report. We'll have an exit meeting. We will document the management response of what actions they are going to take against the observation which we have. And the final report will be circulated to the top management. So many places, what happens is at the third stage, our work stops. But many clients require us to go ahead and look at the monitoring and follow process also. So that's the 4th stage. So a lot of organized client and mature clients, we also do the 4th stage of work, where we look at monitoring process on implementation of recommendations, follow up and obtain evidence that audit recommendations have been actually implemented. So just not monitoring that they have doing the implementation, but actually we go back and check that whether they have done it correctly or not. And then the right spirit as what they had agreed at the time of discussion with the top management. This is a kind of a typical internal audit report template. Again, it could vary from organization to organization, but these are some of the basics of a typical internal audit report: observation, risk, root cause, recommendations, and management action plan. I'll tell you, most important aspect of any of the internal audit report is that when you are drafting the observation, you have to ensure that what is the root cause of it. Okay. Many times I see people just saying that this particular thing has gone wrong, but they don't look at it. What is the cause for it? And only when you identify the cause, like typically if you are saying that the pricing or in the procurement, we say that the excess material have been purchased. So what could be the root cause for it? Whether someone has not done the proper planning, he must have just gone and placed that some requirement has come from the stores, and you have just placed the order over there. Now the root cause is that he has just, based on the requisition which has come from someone, he has raised the purchase orders. Now that's the outcome of it, right? So root cause will be that he has not done a proper validation that, okay, how much of inventory is lying in that particular store or other stores of the organization. Is there any excess store materials lying in any other plant, which probably we could have shifted over here. So that entire planning process is missing over there. And that's why they landed up buying with the excess material. So excess material is not an observation, it's an impact, right? The observation itself is that there is not a much but proper planning of how the whole procurement has to be done. So this is very important that your root cause has to be very rightly fixed up, because recommendation is something will be generating out of the root cause. And whenever we want to do a implementation follow-up for recommendations, you'll find that if you have not done root causing, you'll find that recommendations cannot be implemented. So after 1 year or 2 years, you'll find that the same observation is getting repeated. But if you have identified the root cause, then you have given the right recommendations, that issue will not recur again. So these are some of the key ingredients of an internal audit report: gap, observation, root cause, risk, recommendations, management response, management action plan, remediation responsibility, and date. And on the top, if you can just see in the report we have given what kind of risk it is there, because many times high, medium, low risk management, the top management may not be interested in looking at a low risk point or a medium risk point, and they may say just give me high risk point only. So we should always classify each of the observations as high, medium, low risk, and maybe depending on our audience with whom you are discussing, you need to take up that observation over there for discussion. The essentials of an internal report. So it should be very accurate. We have to ensure that there are no errors and distortions of the facts, underlying facts. So you have to always write on the facts. It cannot be my opinion. It has to be the facts which needs to be reported in any of the audit reports. You cannot say that I feel that process is weak and all. You have to say the process is weak because of this 1, 2, 4 reasons. It cannot be because I feel its process is not right. That cannot be the statement. Your report should be objective. It should be fair, impartial, and unbiased. It should be very, very clear so that any reader can understand what you are trying to say. You should not use too much of technical language. A normal language which a lot of people will, general people can understand. That is something which you should always use in your language. Your audit report should be as concise as possible, and you should avoid using unnecessary elaborations, superfluous details, redundancy in the report, repetitiveness and wordiness in the reports. And I've seen a lot of people, they try to explain, I went to the, like, I'll give you one example. Sometimes some reports we have seen is that you mentioned, I went to the audit plant on 13th of December, and then I walked through to the plant. So these are not required. Your auditor, you are required to go to the plant, you are required to do that audit. So I think so that is not required to mention. You just need to mention that, there were excess stock lying in the plant. That's it. You don't have to mention that I went to the plant and I went to the stores and I saw excess material lying over there. Not required. Your observation itself is that your excess material lying over there. Constructive. It should be the observation should be able to engage, helpful for the engagement client and organization, and leads to improvement where needed. Just making an observation without any, helping the client to resolve it will not help the client in any ways. So any observation to make needs to be very, very constructive in nature. Unless you have a solution to that problem, you should not make an observation unless it is something which is regulated in nature or something which is in a non-compliance with SOP and all. And always all the observations should be complete. It should give us the target audience all the relevant information, like what is the issue, what is the root cause of it, what is the impact. So every aspect of that should be covered in your observation. And ensure that the report is timely issued and all. If there's any issue which if you are going to report to the management after 3 months or 6 months, it has already lost the essence. So you have to ensure that the report is timely issued to the management. Yeah. So these are the 5 C's in the report writing. I've just tried to summarize what we have mentioned in the previous slide. Criteria. So these are some of the standards or measures used in making an evaluation and verification. Conditions, causes, consequences, and corrective action. So these are 5 C's, very easy to remember. And if you just Google you'll find these are some 5 C's in report writing. They all talk about it. So I'll just try to skip this particular slide on report writing. So now I'm going to start with my technical sessions on, as I mentioned to you, there are 2 main processes which I'm going to cover over here today. One is on the procurement and next one is on the order to cash. Okay. So when we say procurement, many organizations say, "Mujhe khali purchase audit kar do." Purchase is not only, it's a very small process. When we talk about procure to pay, it is a complete end-to-end process. We start from vendor management. We look at procurement planning. We look at requisition and purchasing, receiving and warehousing, invoice processing, and payables. So if you look at it, it's a very, very almost there are 5 processes which further can be, we can further bifurcate or sub-bifurcate into maybe 7, 8 more areas. Yeah, typical receiving and warehousing can be further bifurcated into quality control checks. So all those we can further sub-bifurcate, but I think these are more broad 5 levels of process we have defined in the procure to pay process. So here I'm just going to explain to you, how we look at when you're doing audit for purchase to pay. So how we are going to look at a particular observation. Yeah. So I just mentioned to you about, one of the observations was no review of inventory levels and lead times. So one of the observations was that there is no mechanism for periodically reviewing standard inventory levels and lead times for spares and consumables standard inventory levels were last revised in, or maybe a few years back, thereafter has not been reviewed. Now, what could be the risk for this one? Okay. So these are something which, you have to ensure that your report talks about it. So if you look at it, we have tried to completely catch the whole root cause of it, that, the last standards were revised a couple of years back and they have not been revisited. So what could be the implications, if the standards of inventories are not revised, and for lead times are not revised? I could have a delay in procurement of materials resulting in stock out. There could be excess also purchase. There could be short inventory purchase also, because your inventory levels have not been reviewed. Because in many of the organizations, they have an SAP based ERP system, and it governs on this principle of, inventory level plus your requirement plus your, stocks lying at various locations, and plus the desired inventory levels to be maintained. Based on that, it arrives at the requisition quantity. So if this is one of the parameters for an ERP, and if this has not been revised, your entire inventory could be, planning could go for a toss. So what the recommendation could be, see, your recommendation should be very, very specific over here. So define procedure for periodic review of inventory levels and lead times across item categories. So if you look at it, I'm not saying that, review the inventory levels. Okay. If I just say mention that inventory levels needs to be reviewed, then it becomes just a one-time activity. Okay. What we are suggesting is define procedures for periodic review, which means that I'm saying that you define that every 3 months, every 6 months, once in a year, once in a 2 years, you are going to review your inventory levels and lead time across item categories. So if you look at it, we are trying to make it very, very specific of how periodically we have to review each one of them. And now one question is that, sir, how do we find this kind of observations? So one of the processes that, if you look at now, again, I want to take back you to the previous slides over there. I'll just take you back again 2-3 steps back, right? I'll just first mention about here. How do I find out this issue? Inquire from the process owners when the inventory levels were last revised. Analyze average monthly consumption and lead time and compare with defined norms. So these are the 2 steps which you have to carry out. And this is something which we always carry out at stage number when we talk about field work. So when we are doing the field work, we interview the process owners, we document our review, we do testing and verifications. At this stage, particular area, we look at this particular interviews we carry out over there. So I'll highlight few more gaps in typical purchase to pay processes. Yeah. So now today we have a lot of tools which are available in doing internal audits, but of course the process walkthrough has to be done by human. It cannot be, it cannot be replaced by artificial intelligence and all. Walkthrough will always be driven by human. But lot of steps which we do, a lot of analytics work which we can do, a lot of preventive controls testing which we do, we can build into controls in my ERP or in my, I can digitalize a lot of these controls. I can use a lot of data analytics to identify those kind of outliers which are there. So which can reduce my manual efforts in doing internal audits. So here I have just talked about 4 sub-processes within the procurement function and what are the typical issues which we come across while doing the internal audits for purchasing function. So one of the observations, quotation comparison not documented. You'll find a lot of places, the quotations are there, but they are not comparable. One quotation is taken for today's date. One quotation is, maybe 3 months back. And that's what they are doing a comparison. And probably then that's not a comparable quote. Or you'll find that quote is from, for one make, if you're using an mortar, which is of a particular, maybe it's a Kirloskar mortar or Compton mortar, which are supposed to be good brand mortar, and you are comparing that with some local make mortars. Those again quotes are not comparable. You will say that okay, this quote is this mortar is much cheaper than a Compton or a Kirloskar mortar, but again it is not an apple to apple comparison. So you have to look at any of these processes whether it is an apple to apple comparison, and whether those quotes have been documented properly or not. And then there has to be a technical evaluation of, okay, if I'm buying from this particular ABC vendors, which is technically qualified vendor, A, B, C, who's the best vendors out of that. So the rating also on quality parameters also has to be given over there. So you have to, when you do a comparative analysis, you have to look at all of these aspects. Then another area which we come across very, very regularly in internal audit observation is that POs do not have typical standard terms and conditions. Okay. You'll find many critical clauses are missing. See, in any purchases, there could be two or three categories of purchase. One is the regular purchases like raw material, packing material, and then there could be certain purchases which are like capex in nature, or there could be one-time purchases. In one-time purchases or capex purchases, it's very important that the standard terms and conditions are very accurately captured over there. Or tomorrow, you're if there's a capex you're incurring, or large project where doing some repair work, though it's an opex cost, but it's a large repairing work you're doing in your plant, and that it requires for shutdown. And if the clause is not there that for completing the work within a certain time period, and there's no penalty liquidity damage clause in that particular purchase order, uh, instead of you have planned that my plant will be shut for a month, your plant could be shut down for 6 months, and probably you have got no recourse to take against the vendor. So that's why you have to ensure that the PO, your purchase orders, have a standard terms and conditions. You should have to check that whether your auditee has defined what are the standard terms and conditions to be there in each of the purchase orders. And no one should be able to deviate from those standard terms and conditions. And if they want to deviate, there needs to be a specific approval for those kind of deviations. Then next item is on the unauthorized purchases. You'll find that in some large organizations, you'll find a lot of there are multiple things which you can check in unauthorized purchases. One is that whether the purchase guy, whether who's buying that purchase is purchasing that, whether is authorized to buy that item or not, and whether is authorized to buy raise PO for that particular value. So if he's authorized to raise purchase order up to only 5 lakh rupees, and he's raising a purchase order for 50 lakh rupees, then it is something which is beyond his limit and is an unauthorized purchase. So we have to look at that aspect. Then sometimes what happens, certain buyers are authorized to buy certain categories of items only. Though he's authority to buy 50 lakhs of purchase orders, he can issue a purchase order up to 50 lakhs, but he's authorized to buy a certain types of chemicals, but then he lands up buying some other capex items also. So we have to ensure that the buyer who's raising a purchase order, he's authorized to raise a purchase order for a particular category of items or not. So that is an aspect which also needs to be covered over here. Then you'll find also there are a lot of delay in purchases. Requisitions are raised, in the month of March, and for 3 months and 4 months, the purchase order have not been raised. You have to look at how adequately are the open purchase orders are being monitored. Is someone looking at this purchase orders on a regular basis? And then whether there are any excess purchases or not. So these are some of the typical issues which will come across. And just not only doing a process walkthroughs, but when you look at purchase to pay, there are a lot of data analytics which you can do, and where you have to regularly review every monthly and all. We suggest to client that why don't you use a solution on data analytics where you can generate a test scripts, and this checks can be performed automatically every month. The manual efforts and doing all this kind of exercise can be reduced substantially. Like some of our typical data analytics testing which we do, tests we carry out on, and these are some of the typical outcome of those. So we have seen like same material procured at different pricing during the same period. Then higher share of business allocation to a vendor with high price, low quality. Then purchase order has been split to circumvent the purchase approval limits. Then PO quantity more than the PR quantity. PO raised after receipt of goods. So these are some of the data analytics outcome in the purchase order management process. Then we talk about purchase acquisition. Next is on whether the PR has been approved as per the DOA which has been defined, or whether the DOA has been defined or not. Then purchase or acquisition is not according to the requirement. So these are some of the issues which you have to look at when looking at the procurement process. And these are some of the data analytics reviews which we carried out. Aging analysis of open PR, then delay in raising PR date, lead time, required dates. Any questions, or can move ahead?
No questions.
Yeah. So again, on the vendor master management, we look at whether who has got access to create the vendor masters. Here today, if you have someone has a person who can do lot of frauds, if an unauthorized person can amend the vendor master. Today, if you look at it, most of the companies have have entire payment is done online to the vendor masters. The moment the purchase order is booked, uh, and on the due date, the payment gets processed based on the vendor master, and all the IFC, the bank details, and all of the vendors are updated in that particular vendor master. Now today, if I can go and change the vendor master. I can go and update my personal bank account in that master. No one will come to know also, and my payment will come to my bank account on a regular basis. Vendor account will show nil balance because payment has gone from the particular vendor, but it's gone to credit to my account. So it is very important that any organization, the vendor master controls are very, very strongly defined, and there has to be a maker checker over there. The person who's anyone can amend the master should not be the process over there. So the person who's modifying the master should not have the right to post that master. There should be maker checker. The person who's approving the vendor master change should not have a right to input the details in the vendor master. Another aspect we have seen is a lot of vendor masters have an incomplete details and all. Now there are a lot of repercussions when we have incomplete details in the vendor masters. See, your lot of if you look at high-end ERPs like SAP and other ERPs, you'll find the entire vendor master modules are there, wherein you capture your bank details, your GST ref details, the GST ref number of your vendor, your PAN details of the vendor, and subsequently, your all your TDS deductions and all is done based on those vendor masters details over there. Now, if this master is not correctly updated, I have to put in a lot of additional efforts annually when I'm filing my returns and all, which has to be done manually in any other tool which you are using for tax and all. So if your masters are correctly they're updated in your ERP or your accounting system, your tally or whatever system is there, then you don't have to do this again, the process of doing a duplicate efforts at a time of filing of your tax returns for GST and your TDS and all. And these are some of the data analytics which we perform. Duplicate code exists for the same vendors. Then this is again a very big challenge. I can have a vendor with multiple codes. So whole my reconciliation with the vendors can go for a toss. In one account, probably I paid an advance. In other accounts, there is a bill which booking has been done, and these are not getting knocked off. So if the advance is not adjusted against the outstanding, it may happen that I may pay excess to the vendor. So it's very important that we don't have a duplicate codes. So these are some of the data analytics which we perform to identify duplicate vendor codes, incomplete details captured in the vendor master, inactive vendors not blocked for further orders in vendor masters, single reliance vendor for an item. Again, single reliance is very, very important. As I mentioned to you, internal is not only about, if you look at my first slide where I talked about, internal is also about risk management. So this is a very important aspect from a risk management perspective. If in any organization you've got only one vendor for one item, you will not get the optimum pricing. Vendor knows that today whatever price you will ask for it, you'll have to he will get probably, if he asks for a 15% increment, I have got no choice but to go with him because I don't have any alternative vendor. And this is very important in certain chemical sectors and and pharma sectors, because there you cannot overnight change a vendor. It has to go to a particular stability test and other things. So it's very important that you have a multiple vendors itself. So we carry out a data analysis of which are the vendors who are a single source vendors, and we try to understand from management what risk is there with those particular vendors, and how we can mitigate those risks. So this is something which very, very important value add which you can provide to the vendors, to your client over there. Next item is on invoice processing and payments. Here we have got observations like inaccurate, duplicate, unauthorized invoice processing, then goods received not accounted, your unauthorized, inaccurate, delayed payment to vendors, advance pay to vendors not settled at the time of payment processing, inaccurate accounting of payments. Again, see, this is one very weak area in a lot of companies I have seen. See that the nature of payment varies by organization to organization. Okay, your controls for each nature of expenses also could vary. Okay, today if I'm processing a invoice for a raw material, the controls could be completely different than when I'm processing a bill for, say, for a capex expenses, or say for a contract workers. Typically, when you're looking at a contract workers or housekeeping staff and all, your checks and balances would be like, okay, whether you would have a contract with the vendor, with your contractors, and it will be, the payment will be based on attendance or certain service level agreements. So it's very important that your checkpoints are very, very clearly defining on what are the checks and balances when you're going to look at it, when you're going to do a auditing of this kind of expenses. For raw material, again, it could be quality. What is the quality of raw material, whether that meets my requirement or not, whether the weight payment is correct or not. Okay. All those aspects have to be covered when you're looking at a raw material invoice. Similarly, for advances are very, very important aspects. So we have seen many times invoices have been processed without recovering, without mapping it with the PO. So what happens subsequently when the bill booking is done, the invoice does not get automatically mapped with the particular advance, and thus what happens is there could be excess payment to the vendor. So this is something then you have to manually reconcile and identify the advances which have been paid against the particular invoice or vendor. Sorry. Yeah. Again, organization depends. Sometimes goods have been received, they have not been accounted, GRN has not been booked for a long period of time. So these are typical issues which will get in any of the payment processing process. And these are some of the analytics which we run to identify these kind of issues, like aging analysis of goods received, pending invoice entry, aging analysis of invoice entered, pending approvals, delay in approval of invoices, aging analysis of overdue vendors, invoicing, pending payment. Another very important checks is that the payment amount greater than the value of good received. We have come across cases where the excess payment has made more than the GRN value. So vendor has raised the bill for supposing you have received goods when your stores actually got the material worth maybe 10 lakhs, whereas vendor has issued an invoice for 12 lakhs and payment has been made for 12 lakhs, though actual material received only 10 lakh rupees. So unless you have a three-way match, these gaps will happen, and a lot of companies may not have this kind of ERP system or robust ERP system. So one of the important design aspect we have to look at is that whether the designing part is taken care or not in that particular organization, whether they have a three-way match system or not. Another thing which we have seen is that early payment without utilizing the credit period. And this is a very, very standard report which you can get in SAP, where SAP can share the report of what date when what was the credit term of the vendors and when the payment has been made. And you can analyze that report, and straight away you get an exception report which you can circulate as a part of your audit observation. Then duplicate payment of the same invoice. This is something which probably you have to use an analytics to this one. This may not be a standard report of an SAP, but this is something where you can use your analytics and identify duplicate payment. Many places we use Excel based also analytics to identify this kind of duplicate payments. Yeah. So this was I covered on the procure to pay process. Of course, the scope could be very wide. I have just touched upon some of the aspects over there, and as you go deeper into it, probably you will come across much more wider scope over here. Now I'll talk to you about the next process, which is the last process for today's evening, is order to cash. Okay. We normally most of the people I've seen, they mention sales audit kar lo, sales audit kar lo. Sales audit is very small as compared to order to cash, which has got a much wider term. Okay. So order to cash is a major business process which includes sales planning. It starts from sales planning, pricing, customer acceptance, order processing, invoicing and dispatch, sales accounting, collections and monitoring, and sales return. So if you look at it, they are such a wide process. See, I tell you, sales is a very important process, and that's the reason why I've kept it after the purchases. Now, if you look at it, this whole sales process is linked with everything part of the business. It's linked with accounts and finance receivable. See, if you look at it in this chart, I hope you all can see the chart clearly. So it's a linkage with the production, sales. So I'll have a sales forecast. I'll have a sales plan. I may have a sales order. So based on my sales order, sales plan, sales forecast, I'll do production. So based on the production plan, I'll do a procurement. And then based on the procurement, that material will be used in production. And then I'll have an inventory generated. I'll have raw material over there. I'll have a finished good. So if you can look at the sales, has got implications across every aspect of the organization. And this is one of the key driver. So any process going wrong in any of this thing could have implications. If there's a production planning has gone wrong, it will impact my sales. If there is an excess procurement, it will have result in inventory management, excess inventory, resulting in working capital blockage. Or there's a less procurement happening, then it will result in my loss of sales because I may not be able to timely deliver material to my customer. Then again, where if you look at the last process, where you're talking about finance and accounts, so my sales accounting, receipt and provisioning, everything is linked, and that has an implication on my finance and accounts and accounts receivable accounting over there. And if you look at the bottom of the table where we talked about the entire journey of the order to cash cycles. So here we're talking about customer management, credit approvals, order generations, customer billing, customer payments, account receivable, dispute resolution, collections, cash management, and general accounting. So if you look at it, it's such a long process. When it comes to customer management, we look at the whole entire customer data management, like his masters, how they are maintained, how accurate they are. Credit approval again is a very critical process in any organization. In credit approvals, we look at how the credit limit has been assigned. And tomorrow, one can give credit to a person who may not be credit worthy. So it's very important that we have a very strong credit approval process over there. And it's just not only that one-time credit approval has to be done, but also a process needs to be very robust, wherein there's a periodic review of the credit approval mechanism happens. If I've assigned someone, one existing customer limit of maybe a 1 crore, and I somehow we find that his business is not doing much business with the organization, and probably based on the existing business which is doing with the organization for last 8 months or 9 months, his limit should be 30 lakhs or 40 lakhs. Now we need to have a robust process by which automatically the credit limit needs to be reviewed and revised to 30 lakhs or 40 lakhs based on his eligibility. And we should not continue that 1 crore of, since previously my eligible limit was 1 crore. So now let us continue with that limit. It's a big risk. It could be signed that, that client of yours, your customers of yours, he may not doing well. Today's his offtake of materials is very low. So maybe business wise, he's having trouble. This could be symptoms, why his business has gone. Why he's doing less amount of business with us. It could be his maybe it's possible that he may have got he may be selling some other customer or competitor's product. That maybe could one of the reason, but one of but these are some symptoms we have to analyze. Why that business is doing, why his business has become low with us, and does that require recalibration of the credit limit? Next is on the order generation. This is a very critical area, one of the most important area in order to cash review. Order generation doesn't mean only just generating a sales order. It includes my pricing approval, ensuring that my right price goes to the customer and that price is properly approved. Now again, they could be industry to industry. The whole pricing mechanism could be varying. Like certain organizations, they have got a standard price based on which they can give a certain discounts. Certain organizations, they work on a margin principle. And okay, whatever I need to earn maybe 10% margin or 15% margin on my deal. Okay. So whether I am earning that kind of margins or not. So the whole order generation has entire price setting, price approval for each of the sales order over there. Then customer billing. This again could be a very, very important aspect, where you have to bill customers. See, a lot of controls are there in the ERP today. A lot of preventive controls already built into the ERP, where based on the masters and all, the billing happens based on the pick lists you are generated. But still, there could be a lot of aspects which need to cover. Like certain businesses, what happens is my billing is linked to certain other milestones. Also, there could be like certain, if it's a service industries or in a typical, my billing will be dependent on multiple factors. So I have to ensure that whether those multiple factors have been considered while billing. Then collections, customer payments, account receivable. Again, these are very standardized. If there are any disputes, how we are resolving those disputes. And it's very important that, any account receivable where we have a very, very overdue outstanding for a long period of time, it needs to be investigated. If your credit term is maybe a 30 days of credit term is there and the money is not coming within the 30th day or 45 days, it seems there's some issue with your deliverables. Client has not accepted your materials or is not satisfied with your deliverables, or some issues there, or client has having some financial trouble. So it's very important that you look into the any old overdues which are beyond their credit period. And this will also help you to resolve any dispute which could be there with the client. Then collections, cash management, general accounting. These are some of the processes a part of this one here. So these are some of the typical issues which we find in order to cash reviews. Order processing, you'll find inaccurate billing. You'll find duplicate or missing sales invoices. Generally, all the sales invoices should be serially numbered, but you'll find certain invoices which are missing and all. And specifically with the GST scenarios, it's very important that they come and check whether the GST your invoices are serially numbered or not. And if the invoices are serially numbered, then you could get into trouble with them. Then unauthorized dispatch, removal of goods, dummy or fictitious orders are created in the systems. We have seen clients in some organization, where the sales team have raised fictitious orders. They have generated invoices also, and then subsequently after the month end to meet the targets, and subsequently in the subsequent month they have reversed their invoices also. So this is something which we have to study over there. We have to look at what are the credit notes for sales returns generated in the next subsequent month and see whether they have any, are they due to fictitious orders or some other reason. So it's very important we analyze those kind of orders over there. The next is on unauthorized sales with improper terms and conditions. This is very important when specifically, again, it depends on industry to industry, but certain industries very important that we have a very, very clear terms and conditions, specifically when you are, dealing in service industries and all. Typically in material industries, where a lot of things are, are known, the facts are known, the quality of specs are specified and all. There's not much deviations, but when it comes to, EPC industries, where into construction industries or service industries, there are a lot of things are contractually driven. Each order it's very important that all the terms and conditions are very, very clearly captured over there. And as I mentioned, the last one is very, very important, is a sales exit credit limit. A lot of ERPs do have a facility that wherein you have a credit control in place, which looks at both credit limit as well as credit period based controls is there. Like typically in SAP, you'll find both the controls are there, but many times these have not been activated by the client, or they would have activated one of them. They would have activated credit control based on credit limits, but not for overdue, or they would activate for overdue, but not for limits. Again, it is an industry to industry, it varies, but if certain clients, they deal only with B2B customers and with whom they are dealing on a regular basis. So their probably limit may not be important, but period could be very important. So again, you'll have to take a practical view over there of what is the nature of business and whether that credit limit, how it suits the business requirement. So that aspect also you have to look at it. So maybe if you just try to cut and paste the same observation across other clients, it may not work. So it's very important that you understand what is the nuances of business and then give this kind of recommendations. Next is the pricing. Now again, inadequate basis for determining product prices. It's very important that what is the basis of how your product pricing is done, what is the margin you are looking at it. Yeah. There are a lot of implications. Certain clients whose pricing is decided on the secondary sales pricing. Typically in FMCG clients, your pricing is based on the secondary pricing. So you sell to your distributors, and then distributor subsequently sells to stockists, and the stockist sells to the retailers. So chain could be very, very long in a typical FMCG sectors, and it's this companies, typically FMCG companies, want to they also somehow moderate the price at which it is sold to the end customers. So it is very, very important that how they determine the pricing for this kind of customers and whether that is done correctly or not. So whether there could be, whether the GST implications in every stages of the chain, whether they have been correctly factored or not. So all of this had to be very, very correct, looked at very minutely while, while doing the audit. The next point is on the customers or group of customers not identified for special pricing. You may have sometimes some organizations do have a special pricing for certain category of customers. So whether that special pricing is given to all the customers, or there are some specific customers only to whom we are giving the special pricing, and if we are giving a special pricing, is there a policy around that, whether it is approved, and whether the guidelines very, very clearly states which scenarios this kind of special pricing will be given, what period it has to be given. So these are aspects we have to audit. Next is on the price master not updated accurately on a timely basis. See, a lot of companies I mentioned to you have a very, very robust ERP where the pricing is defined in the ERP. So we have to see whether the price list with the periodicity is very, very clearly defined in the ERP or not, and on a timely basis. Now, a certain industry which have got where they have a very, very, where the pricing is linked to the raw material prices. Typically, maybe a crude oil linked. Typically in a chemical industry, your pricing is linked to your underlying raw material prices, like crude or something like that. So if today if the crude prices is going up, it is very important that I quickly review my prices to my customers and I revise my prices, my sale prices upward. There could be delay in review of prices. There could be, it's possible that, you have got 200 customers, you have updated pricing for, 10 customers or 50 customers, and maybe 5 customers has not given approval for, additional price increase, while some customers you have forgotten to chase them for price increase. So these kind of issues could emerge over there. So while auditing, you have to check whether the pricing movement has been done alignment with the raw material prices or not. Again, you can use a lot of data analytics to find the trend over there, and along with the raw material price trend and behavior and all. So this is something which is very, very important exercise which you have to do while doing the internal audit for order to cash cycle. Next is on the sales return. Here again, we look at sale credit notes are not applied to corresponding invoice, resulting in distorted age of receivables. So you'll find, this is a typical issue we have seen, hygiene issue, where, you have issued the credit note, you have not mapped it against the right invoice. Again, it may happen that, where you are typically dealing in an FMCG client or a chemical industry, where, prices keep on fluctuating. Okay. Or I've sold a material against a particular batch number, and where price was X and today has become X, the price has become X plus 1. But I'm passing credit note based on X plus 1 and not on the old invoice against which the materials were sold. So it's very, very important that we apply the credit note to the right invoice and against the right pricing which was there in the invoice. Again, next point which was there in sales returns, reasons for sales returns not verified. This again could be, very, very eye-opener at times, where we have seen across, in an organization, there's a lot of sales dump which happens. Your quality of material is not right, and because of which, materials are getting returned. So these are some of the symptoms which you have to see what are the reason for this, and this probably will, it could be an eye opener for you at times, when you do analysis of the sales returns. So though the sales returns could be approved as by the delegation authority and all, but sometimes you can see beyond what is coming which your team may point out to you. Except of unauthorized sales returns, unapproved sales returns have happened. Or typically in pharma industry, what we have seen is that you'll find sales dump happens a lot, and at the month end, and returns also happens pharma or FMCG sectors. And sometimes you sell certain products which are having a short shelf life, with a condition that this materials will not be returned back to you. Okay, so supposing my shelf life of a product, for expiry is maybe 2 years or 3 years, and now it is a fag end of the product expiry, maybe 9 months are left. So you sell these materials to your special at a special price to your stockist, maybe at a 30% or 40% discount in what normal price is. Now we have come across cases that this guy has purchased that material, the stockist has purchased, and he's diverted some other in the market, and through that channel they have again gone back and returned those materials to the company. So we have to check whether that batch number wise control is there or not. So it's very, very important that those kind of deviations don't happen. Again, credit notes issued to customers without receiving the goods or dummy sales returns have happened. So this is also, we have come across cases like this in the past. This is last slide. Collections and monitoring. Again, collection received, deposited but not accounted, or collection received, recorded but not received. So this is something which you may come across cases. You'll not find very often this kind of cases, but these cases do happen. Especially when you do audits of depots and branches and all, where the salesperson and the accounts team are a little friendly with the customers, and they all do want to meet targets and all. So may they record the collections received, but they have not deposited checks. So we also run analytics over here. They are special type of analytics. Of what we do is we generate an analytics report between the date when the check is received from the customer as per the check accounting date, and the date when the amount has got actually credited in the bank statement. So when we do this, there are two different kind of reports. We map those two reports, and we try to identify cases where the deviation is more than 10 days or 8 days, taking a certain cutoffs. And we identify those cases, and then we go and question that why this kind of things have happened. And at times you've seen certain trends also, that you find that particular branch or particular vendor, this is a very, very often case which is happening over there. And we also try to investigate whether there's any special discount being given to those customers, or what kind of relationship exists between that particular customers and my sales guy or my finance person at the branch and all. And we have seen a lot of things, surprises coming up over there. So this is some of the process which we can, the method by which we can identify these kind of issues in the sales process. Then, provision had not been made adequately at the year end. Then unauthorized write-off in customer accounts. These are something which you can, review both. Provision is something which again has to be manually verified and all. But unauthorized write-off in customer account is something which you should generate an exception report and review it very thoroughly of what kind of write-offs have happened, what is the reason for those write-offs. And we have seen sometimes, there is a lot of deviations over there. Sometimes we have seen that even, 500, 1,000 rupees, short collections there. And when you total it up, the amount accumulates to a few crores. Now, someone in the accounts department, can he, along with the sales guy, have collected the money in cash, and they have, shown it as a write-off or receipt, or not receipt, but as a write-off, and they have pocketed that money. So this is something which you have to look at the trend over there, and they analyze over there, and then we can come to certain conclusions over there. And there's a last section on sales accounting. Revenue not recognized despite goods dispatch and invoice to customers. So there we have seen, cases where I mentioned to you, we have come across cases where, materials have been invoiced but not dispatched to the customers, or, they could be delayed recognizing the sales. Then sales cutoff not adhered to. Then revenue recognized despite invoice not generated, that is instances of uninvoiced sales. So these are some of the cases which we can cover when we issues which have come up while doing the sales audit. Yeah. I think this is all from my end. If you have any questions, I'll be happy to take it up.
But I asked for whether this presentation will be shared with them.
Sorry.
Members are asked whether this presentation will be shared with them.
Some of the contents are proprietary in nature. So whatever is not a proprietary nature, I'll share with you all people.
Okay. That's all.
I think there are no other questions, Dhiren. May I now request here Rakesh Tapadia to kindly grant a vote of thanks to the speaker and the audience.
Good evening. It's my privilege and honor to present a propose a heartful vote of thanks to CA Hiren Upadhyay. First and foremost, I would like to express my gratitude to our esteemed speaker CA Hiren Upadhyay for his insightful and comprehensive presentation on the overview of internal audit. With the extensive knowledge and expertise, CA Hiren Upadhyay has provided us with a deep understanding of the critical role which internal audit plays in ensuring effective governance, risk management, and control process within the organization. He has enlightened us on the internal audit standards, the audit universal concept, and the systematic audit process which needs to be followed and implemented. Further, he has shared with us his practical approach to auditing the procurement process, order to cash process, which is a crucial concern in the most business. His clear explanation and real life example have shed light on the intricacies of internal auditing, enabling us to appreciate its significance in today's complex business environment. With this, I would request everyone to have a loud applause for him. Thank you. I would further like to thank all the present participants in this event on behalf of all of us.
Thank you, everyone. Thank you, Rakesh. Thank you, Hiren Bhai.
Thank you very much.
So 1 second, there is a question from the members. Can I? Hello, Hiren sir, there is a question from the member.
Sure. I'll be happy to take it up.
Yeah. How does the management classify the internal controls into high and medium?
See, again, just now before I had the seminar, I had a long discussion with the independent directors and the management on how you classify a typical observation high, medium, low risk, right? See, stat auditors may take a different view. Okay, they look at a materiality level, which could be a much higher than what probably we may, as an internal auditors, may take up over there. So you have to look at what is the kind of nature of the observation. Okay, if certain thing which so typically we say that what is the high nature of risk. Okay, typically when the process is not very clearly defined, or process is not in place, means it's the high risk. Okay, and if the impact of that process not been defined is very high, then it is definitely high risk. But if the impact could be medium, then it could be a medium risk. But of course, it cannot be low risk because the process is not very clearly defined. There's an inconsistency in the process. There could be a typical non-compliance. Non-compliance could be again a very high risk if it requires some sort of imprisonment or something like that. But if there are delays in filing returns or which can be compounded, so it could be medium risk or low risk. So again, it is it's how you perceive a risk in that particular observation. Based on that, we have defined high, medium, low. a particular observation.
Can wait for 2 minutes if possible, so that if
Sure.
member want to write something, then they can just ask them. There is a feedback from a member. Presentation was very exhaustive, especially the issue section was very helpful. It's only a feedback.
I couldn't hear what you said. Not clear.
It's a feedback from a member. They said the presentation was very exhaustive, especially the issue section was very helpful.
Yeah. Okay. Thank you.
I think members are still typing from the queries from their sides.
Sure, sir.
Recording in progress.
I think sir, you can just take.
Yeah, I think there are no more questions. Hereby thank this CA Hiren for a wonderful session and all the attendees for today's thing. Rakesh Tapadeji, of course, as usual. And Arun Agarwal and the Internal Audit Board, we thank you all for attending today's session and making it successful. Thanks a lot.
Thank you. Thank you.
Yeah. Thank you, everyone. And it was a pleasure for me to be part of this wonderful ICI and this to be presenter for today's evening.
Thank you. Thank you.
Thank you. Thank you.
Pleasure is all. Yes, sir. Thank you.
Thank you.